Good morning. Welcome to your daily morning digest for Thursday, February 12, 2026. I'm here with your dose of markets, crypto, and life wisdom to fuel your day ahead. Let's dive straight into what moved markets overnight. Bitcoin took a tumble, slipping below $67,000 after the US released surprisingly strong jobs data. Now, you might wonder why good economic news would hurt crypto. Here's the thing, the jobs report came in way hotter than expected, showing the US economy is still adding jobs at a robust pace. That's great for workers, but it throws a wrench into the Federal Reserve's plans to cut interest rates. Traders had been betting on rate cuts this year, which would make borrowing cheaper and push investors toward riskier assets like Bitcoin. But when the economy looks this strong, the Fed has less reason to cut rates. So Bitcoin, which had been trading in a tight band between $66,000 and $70,000, dropped as traders recalibrated their expectations. The crypto market hates uncertainty about monetary policy, and yesterday we got a big dose of it. Bitcoin settled around $67,600, with selling pressure intensifying throughout the day. The takeaway here isn't that crypto is doomed, it's that macro conditions still drive the bus, and right now, that bus is waiting to see what the Fed does next. Staying in crypto, Telegram just made a massive move in the blockchain space. The messaging giant announced cross-chain deposits for its self-custodial TON wallet, and this is a bigger deal than it might sound. Over 100 million Telegram users can now fund their TON wallet using crypto from all the most popular blockchains, Bitcoin, Ethereum, Solana, you name it, without needing to manually bridge tokens, swap them, or jump through the usual hoops. Telegram basically built an on-ramp that makes crypto feel as easy as sending a message. This is exactly the kind of infrastructure crypto needs to go mainstream. Most people don't want to understand liquidity pools or wrap tokens, they just want things to work. Telegram gets that. By integrating cross-chain deposits directly into a platform people already use daily, they're lowering the barrier to entry. And with Telegram's massive user base, especially in markets like Asia and Eastern Europe where crypto adoption is already high, this could bring millions of new users into the TON ecosystem. If you've been watching the infrastructure wars in crypto, this is Telegram saying, we're not just a messaging app, we're a financial platform. Now let's talk oil and geopolitics. U.S. Energy Secretary Chris Wright just wrapped up a high-stakes visit to Venezuela, meeting with the country's president and PDVSA, the state oil company. The goal? Help Venezuela recover its oil production, which has been decimated by years of sanctions and mismanagement. Venezuela sits on the world's largest proven oil reserves, but production has cratered from over 3 million barrels per day in the late 90s to barely a trickle today. Wright also met with executives from Chevron and Spain's Repsol, the companies with the most skin in the game down there. This visit is a big shift. For years, US-Venezuela relations were frozen, sanctions were tight, and the oil industry was essentially off-limits. But with recent political changes in Venezuela and the Trump administration's focus on energy dominance, Washington is exploring whether it can help restart Venezuelan oil production, not just to lower global oil prices, but to reduce dependence on OPEC and Russia. It's a Herculean task, as one report put it, because Venezuela's infrastructure is in terrible shape. But if they pull it off, it could reshape global energy markets. Keep an eye on this one, oil politics always have ripple effects. Speaking of energy policy, President Trump signed an executive order this week directing the Pentagon to buy electricity from coal-fired power plants. Yes, you heard that right, coal. The order also instructs the Department of Energy to issue $175 million in funds to keep coal plants online in West Virginia, Ohio, North Carolina, and Kentucky. The administration is framing this as a national security and energy grid resilience move, arguing that coal plants provide baseload power that renewables can't always deliver. Critics, of course, are calling it a handout to a dying industry. Coal has been in terminal decline for years as natural gas and renewables have gotten cheaper and cleaner. But Trump's move is less about economics and more about politics and symbolism. Coal country has been a loyal voting bloc, and keeping those plants open, even at a loss, is a way to signal support. From a market perspective, this won't reverse coal's long-term decline, but it does buy time for a few plants that were on the verge of shutting down. Whether that's smart energy policy or just expensive nostalgia depends on who you ask. Let's switch gears to the stock market, where the Dow Jones Industrial Average just hit 50,000 for the first time in history. That's a milestone worth celebrating, right? Well, yes and no. The Dow gained 4.7% year-to-date and crossed 50,000 on February 8th. That's impressive. But here's the catch: beneath that headline number, the US stock market is showing growing divergence. While the Dow surged 2.5% in the first week of February, the S&P 500 was basically flat, down just 0.1%. The Nasdaq Composite, loaded with tech stocks, actually dropped 1.8%. Meanwhile, the Russell 2000, which tracks small-cap stocks, climbed more than 2%. What's happening is rotation. Investors are moving money out of big tech and growth stocks and into old economy blue chips and small caps. That makes sense if you think the economy is staying strong but rate cuts are off the table. Blue chips and small caps tend to do better in that environment. But it also means the market rally is narrowing, not broadening. When the Dow hits 50,000 but half the market is struggling, that's a warning sign. It doesn't mean a crash is coming, but it does mean this rally isn't as healthy as the headline suggests. Watch for whether this divergence continues or whether the market starts moving together again. Across the Atlantic, the UK housing market is showing early signs of recovery after a tough stretch. According to a survey from the Royal Institution of Chartered Surveyors, surveyors are reporting a sharp uptick in confidence for both sales and prices. About 35% of surveyors now predict house prices will rise in 2026, up from much lower expectations just a few months ago. What's driving this? Two things: expectations of further interest rate cuts from the Bank of England, and the removal of budget-related uncertainty that had been weighing on the market earlier in the year. The UK housing market has been in a funk since rates started climbing in 2022, with transactions falling and prices stagnating. But with inflation cooling and the Bank of England signalling more cuts ahead, buyers are starting to come back. That said, the recovery is expected to be gradual. Activity levels are still subdued, and the market is nowhere near the frenzy of a few years ago. But after a long winter, even a tentative thaw is good news. If you've been watching UK property or have exposure to UK financials, this is a trend worth monitoring. Now let's shift to some global news that's a bit more exciting. The Milan Cortina 2026 Winter Olympics are underway right now, running from February 6th through the 22nd. This is Italy's chance to shine on the world stage, with events spread across Milan, Cortina d'Ampezzo, and other sites in Lombardy and northeast Italy. The opening ceremony was a spectacle of pageantry and Italian culture, and now the competition is in full swing. Today's slate includes luge, skeleton, curling, and snowboarding, all the winter sports that make the Olympics thrilling to watch. The Games are also a showcase of high-altitude sport meeting luxury branding, especially in Cortina, which is known for its upscale vibe. Beyond the medals, the Olympics are a huge economic driver for Italy, boosting tourism, infrastructure, and global visibility. If you haven't been following, now's a great time to tune in. There's nothing quite like watching athletes push the limits of human performance on ice and snow. And who knows, we might witness a record-breaking moment or an underdog story that becomes Olympic legend. Finally, let's talk about a scientific breakthrough that could reshape the future of computing. Scientists at the Indian Institute of Science have developed shape-shifting molecules that can switch roles on the fly, behaving as memory, logic, or even artificial synapses within the same structure. This is huge. Traditional computer chips are built on silicon transistors that do one job each. They're either memory or logic or something else. But these new molecular devices are adaptive. They can reorganize their electrons and ions dynamically, changing their function based on the task at hand. This brings computing closer to how the human brain works, where neurons are incredibly flexible and can learn and adapt in real time. The potential applications are mind-blowing. Imagine AI hardware that doesn't just process data but actually learns and evolves at the hardware level, not just the software level. This could unlock neuromorphic computing, systems that mimic the brain's efficiency and adaptability. We're still in the early stages, but breakthroughs like this are why 2026 could be a pivotal year for AI hardware. If these molecular devices scale up, they could eventually replace silicon entirely, leading to faster, smarter, more energy-efficient computers. Keep this one on your radar. And now, let's shift gears to today's Life Wisdom segment. Today's topic comes from Charles Darwin, and it's a principle that's as relevant to markets and careers as it is to biology: adaptability over strength. Darwin is often misquoted as saying survival of the fittest, but what he actually argued was that it's not the strongest or the most intelligent that survive, it's the most adaptable to change. That insight is profound, and it applies to just about every domain of life. Think about markets. The companies that dominate today aren't necessarily the ones with the most resources or the biggest brand names. They're the ones that can pivot when the landscape shifts. Look at how Netflix went from mailing DVDs to streaming to producing original content. Or how Amazon started as an online bookstore and became a cloud computing giant. These companies didn't succeed because they were the strongest in their original markets, they succeeded because they were willing to adapt when the world changed. The companies that clung to the old model, Blockbuster, Borders, didn't survive. The same principle applies to careers. In a world where entire industries can be disrupted in a decade, the most valuable skill isn't expertise in a single domain, it's the ability to learn, unlearn, and relearn. Flexibility beats rigidity. If you're locked into one way of thinking or one set of skills, you're vulnerable when the environment changes. But if you're comfortable with uncertainty and willing to evolve, you can thrive in almost any condition. That doesn't mean abandoning your core principles or becoming a shapeless blob. It means being grounded in values but flexible in execution. And it's not just about work. Relationships thrive on adaptability too. People change. Circumstances change. The couples and friendships that last aren't the ones where both people stay exactly the same, they're the ones where both people are willing to grow and adjust together. Rigidity kills relationships. Adaptability sustains them. So how do you build adaptability? First, get comfortable with discomfort. Adaptability means being okay with not having all the answers, with trying new things, with failing and recalibrating. Second, stay curious. Read outside your field. Talk to people with different perspectives. Keep your mental models flexible. Third, practice small changes. You don't have to overhaul your life overnight. But if you can make small adjustments regularly, a new routine, a new skill, a new way of thinking, you build the muscle of adaptability. Darwin's insight is that the world doesn't reward strength or intelligence in isolation. It rewards responsiveness. It rewards the ability to sense when the ground is shifting and to move with it rather than against it. That's as true in markets as it is in nature. The traders who survive aren't the ones with the biggest bankrolls, they're the ones who can adapt their strategy when conditions change. The entrepreneurs who succeed aren't the ones with the best original idea, they're the ones who can pivot when their idea meets reality. And here's the thing, adaptability doesn't mean you're weak or wishy-washy. It means you're smart enough to recognize that the map is not the territory, and that conditions change. The strongest oak might stand tall in calm weather, but it snaps in a storm. The willow bends and survives. So as you go through your day, your week, your year, ask yourself, where am I being rigid when I should be flexible? Where am I clinging to an old model because it's comfortable, even though the world has moved on? And where can I practice adapting, not as a sign of weakness, but as a strategy for long-term survival and success? That's the wisdom for today. Adaptability over strength. Stay flexible. Stay curious. Stay ready to evolve. Thanks for tuning into your daily morning digest. Stay sharp, stay informed, and I'll catch you tomorrow.